Hey there, I am going to show you how to fill out sales and use tax form ST-1 for Illinois sales tax. I am specifically going to say that I'm not an accountant, I am not a tax preparer, I don't work for the state. This video is literally just for me to remember how to figure this out. So some of this stuff might not apply to you, but that's okay. You can take what you need and get the kind of like general idea of filling out this form, because it's really overwhelming when you first look at it. And if someone doesn't explain it to you, it's difficult. So here you're going to put your account ID. That should be given to you when you make a sales and use tax account with the state of Illinois. And then here you're going to put the reporting period. Honestly, I can't remember exactly if it's January through April or January through March, but Q1, let's just say for the sake of this video, they'll tell you the exact reporting periods. I don't sell alcohol or purchase alcohol, so I am going to ignore this. This is specifically for my use case. I am a food e-commerce seller, so if you do general merchandise, I'll point out where you kind of like do the separation. But I sell on Etsy, I sell out of state, and I sell in Illinois. As an Illinois business that collects taxes on sales in Illinois, we have to pay that taxes to the state. So here we're going to put on step 2, line item 1, our total receipts. That's our total sales in Illinois, total sales out of state, and the taxes that we collected on the sales in Illinois, because you don't collect tax on sales that you make out of the state. So our total receipts for the purpose of this video, let's just say, is $2,800. Now, in this first scenario, I'm going to show you how to do this form when you know all of your numbers, and I'll show you what that means. Specifically, like, you know how much taxes you have. Your website will tell you how much taxes you've collected based on the rate that you've set. And then I'll also show you how to do it if you don't know how much taxes you should be collecting, which kind of was the case scenario for me until I figured it out. So I'll show you both cases just in case you're in my same boat. So first we're going to say you know all your numbers, and what I will say is it's important for you to separate and know which sales were made out of state and which ones were made in state. It will make it a lot easier. So make sure you have those numbers before you fill this out. Now, on line 2, it says deductions. Include the tax that's collected, and it says from Schedule A, line 30. So we're going to go here to Schedule A. This is your Schedule A, and we are going to put the taxes that we collected. So the taxes that we collected on our sales in Illinois was $37. Remember, these are fictitious numbers for the purpose of this video. And then the other thing that I have to pay attention to, or you have to pay attention to, is if you sell out of state, you want to deduct those sales. So these are states outside of sales to states outside of Illinois. So let's just say for the purpose of this video that our sales out of state was $1,100. Okay. Now, you'll notice that I've put zeros on everything. That's because we round the dollars up or down depending on if it's, let's say, 1,150 cents, then it would be 1,101. If it was below 50 cents, we would round it down. So that's a general rule. It just makes the math a lot easier, and the state prefers that. So because I don't have any other deductions that are applicable to me, I'm just going to drag these two items and total them for line 17 here. Okay. So 1,100 plus 37 is 1,137. And because these deductions also don't count for my business, I'm going to drag that same number down because line 30 is just adding all those things together. So now what we're going to do is we're going to take this line 30 number, as I stated before, and we're going to put it on our sales and use tax form. So 1137, 00. And then we're going to subtract line 2 from line 1, and that will give us our net sales in Illinois. Okay? With the taxes included. Remember, we included the taxes. So we've got 2,800 minus, no, I'm sorry. We're doing 1137 minus 2,800. It's going to give you a negative number, but that's okay. Just ignore it. 1663 and 0 cents. And now what we're going to do is we are going to take 1663, which is our net sales. And I am a food business, like I said, so I'm going to put it in 5A because it says food here. If you're general merchandise, you'll put it right here. And then Illinois is fun because it's government. So they don't tell you the rates here on the form. You have to figure it out. Luckily, I know the rates. So 10.25% if you're general merchandise, and if you're food, drug, or medical appliances, it's 2.25%. So we're going to take 1663 and multiply it by 2.25%. Okay, that gives us 37.41 cents. Now, like I said, the rule, if it's under 50 cents, we round down. So we're just going to do $37. Now, there's something that's interesting, right? This number here should match this number in your deductions because it's the taxes you collected to your customers. It's the taxes you're going to give to the state. You're not keeping that money. You're just holding on to it for the state. And then what we're going to do is we're going to essentially look at these other items. Like these don't apply to me, so I'm not going to fill them out. And I'm just going to do tax due on receipts, $37. And basically, I'm just going to drag this number wherever there's any addition things. Most of the stuff doesn't apply to me afterwards. So retailer's discount, this is if you file before the 20th of the reporting period, then you'll get a discount actually for filing early, which is great. But for such little taxes collected, the discount's like 25 cents and the state rounds down. So it goes to $0. So that doesn't apply. You can look at the instructions to see if you have enough taxes collected to get a discount that'll be applicable, right? Even if it's $1, every dollar counts. So net tax due on receipts is $37. We subtract 10 from 9. That gives us the same thing. And then taxes on purchase, that doesn't apply to us, so it's just 0. Net tax due, line 16 here. This is tax due. It's, again, $37. Add lines 11 and 15. Most of this stuff is pretty self-explanatory after it. The biggest confusing part is this, especially if you sell on Etsy, and if you have an e-commerce website, that's where it gets a bit tricky. If you sell on Etsy, Etsy does their own thing. So if you only sell on Etsy, you do not have to do this. Now, if you sell on Etsy and you have an e-commerce website, you have to subtract those sales. We're only looking at your website sales. Etsy does their own taxes. Now, again, net tax due, we're dragging this number down to 37, and we are also dragging it down, sorry, not here, to here, and to here. So our total payment due would be $37, and you would just have to pay that to the state again. Now, that's pretty much it for filling out this form. It's pretty simple. If you didn't know your tax amount, right, there is some math that you can do to figure out how to calculate it. And I think for the purpose of this, I will probably get a separate sheet of paper. Otherwise, it'll get confusing. So let's say here's step 2, 1, 2, and 3. Let's say we have our total receipts, okay? And we don't know how much taxes we should have collected because maybe we never got around to it. So we are going to, again, go to our Schedule A and list our out-of-state sales. Remember, this number includes your sales in Illinois taxes that you collected, and out-of-state sales. Okay? Now, we're only collecting taxes for sales in Illinois, so we're going to subtract it. So Schedule A, line item 5 is $1,100. We are going to leave 2 blank because we don't know how much tax that we collected. We don't. We're going to try to figure that out. Now, like I said, we have 2,800. That's our total sales. These interstate commerce sales are out-of-state sales. So we're going to subtract out-of-state sales. That gives us a lovely number of 1,700. These are our sales in Illinois plus Illinois tax that we collected. Now what we're going to do is we are going to take 1,700 and we are going to divide it by 1.0225. Why this number? Because that's the tax rate, and we're essentially multiplying and dividing by this number. So 1,700 divided by 1.225. That will give us $16.62.59. And like I said, because we round up or down, we're going to round this up to $16.63. So we've figured out our taxable receipts, $16.63. That gives us our total sales in Illinois. Okay? Now, naturally, this number subtracted would give us our taxes, because we're going to take 1663 and then we're going to multiply it by 0.02225, that 2.25% tax rate. That gives us $37.41, which we are going to round down, which gives us $37. And from that, we get our taxes on Schedule A, which is $37. Then we can, again, drag it down to line 17, total this up to $11.37. And then you plug that into here. And to double check your work, you basically subtract this number, 1663 minus 2,800. Bam. It's like magic. We love math until we don't. So that's how you figure it out. This whole part is complicated, and you don't have to do it if you don't know. If you know the tax that you have collected. You should know the tax that you've collected because you should be collecting tax. If you haven't been collecting tax on your sales in Illinois, you're going to owe that taxes, and it's going to cut into your profit margins. So make sure you're collecting your taxes. But I hope this video makes sense. I hope that it's helpful, and I know it's going to be helpful for me because this is probably going to be a great refresher when I go to do this every single quarter. So thanks for watching, and bye-bye.